The Internet Computer, ICP, was supposed to be the future of the web, a decentralized dream taking flight. But lately, the dream seems to have crash landed. ICP's price has plummeted, leaving many investors wondering if the project is a high-rise under construction or a demolition site. But hold on a minute, ICP believers. Before you hit the eject button, let's dig into the blueprints. In today's video, we'll be like construction inspectors, analyzing the technical data and market forces that could be shaping ICP's future. So let's get started. Okay, first off, let's talk about those important moving averages. The white line coming through the chart here is the 200-day EMA, a crucial indicator for understanding the long-term trend. Generally, when the price is above this line, it signals a bullish trend, and when it's below, it's a bearish sign. Next, we have the blue line, which represents the 50-day EMA, and the yellow line, which represents the 50-day SMA. These moving averages help us gauge the medium-term momentum. Notice how the price action interacts with these lines. It often provides valuable trading signals. So on the chart here for ICP, we can see that the current price action is lower than the 200-day EMA, but it's also lower than the 50-day EMA and the 50-day simple moving average, the SMA. This is actually an incredibly bearish place for ICP to be, which is why we have seen such an aggressive sell-off since we lost the support level of the 200-day EMA and dropped by 34.06%. Now, there is some more bad news here for the moving averages on the chart for ICP. That is that we can see the 50 EMA and the 50 SMA coming down to cross lower than the 200-day EMA. Now, this is what they call a death cross. It's an incredibly bearish place for ICP to be. The reason for this is it's basically showing us that short-term price action is now less than long-term price action, and a lot of traders will react negatively to this potential cross, indicating more of a bearish move to the downside. One of the things that I do want to kind of say at this point in the video, though, is that the death cross, like a golden cross, is only showing you what's already happened. They are incredibly laggy in the way that they approach the market. For example, the 50-day simple moving average is 50 candles worth and the average price of those 50 candles. So we can already see that the move to the downside, the aggressive sell-off that we've had since we had our high up here on the 27th of March, is an indication as to why the 50-day EMA and the 50-day SMA are coming down very aggressively. In comparison to the 200 candles worth of price action, do we see the 200 EMA actually holding up slightly more firmer? This is an indication that although a death cross is here and we might see some volatility on the back of it, we want to be aware that this is potentially just going to be a short-term move, as we are probably going to be looking for reversals really soon, in my humble opinion. So considering everything with the 50 EMA, the 50 SMA, the 200 EMA, it is all looking unfortunately more bearish right now on the shorter time frames, and potentially here we're going to see some more volatility on the daily time frame for ICP before things start to pick up again and we start to get into more bullish times for ICP. But here is where it gets really interesting. Let's talk about the ABC pattern we see forming right now. Now, the ABC pattern is a classic corrective pattern in Elliott wave theory, indicating a short-term bearish correction. Here, we can see the initial leg down labeled A, followed by a corrective move up labeled B, and we're currently in the C wave, which is driving the price lower. So as we can see, that first initial A wave coming down here was a pretty significant drop. We did see ICP dropping by 49.25%. From the 27th of March to the 13th of April. It had a lot of investors very worried. This was met by a relief rally where we did see ICP move up from the 13th of April up by 53.93% to $16.39.4, which was on the 21st of April. Since then, we have been on a slippage to the downside, and so far we've had a very aggressive sell-off, reaching a total drop drop of 53.64%. Now, with this drop into this C wave, we did go down into our expected range. This range is right down here in this yellow box between $7.05 and $8.30. This is an area that I've been talking about for several weeks, and it's good to see that the price action has finally retraced into these areas. You can let me know whether you've been taking advantage of this by dollar cost averaging into ICP, as we've steadily had a decrease in the price of this particular altcoin. Now, this particular range, which I do think is one that we're going to be keeping a close eye on, may or may not hold. And there's a few reasons for that I will talk about in the video today. So, for example, this slippage to the downside is very aggressive in the way that it has moved. We are currently tracking a 5-wave move to the downside here, where I still think we have the wave 4 and the wave 5 still to come. You can see this is a very aggressive sell-off in comparison to that little wave that we had at the beginning. This is a wave 1, 2, this is all wave 3. I think we're on the wave 4 now, and we'll come down into the 5th wave there. This, to me, is an interesting structure because of this initial move to the downside does appear more like a 3-wave pattern rather than a 5-wave pattern, which, if you understand Elliott wave theory, is quite important. Now, this does hit 1.618, and that would be a trigger point for a standard kind of 5-wave movement, an impulsive trend to the downside. However, I don't think that's really what's going to be happening here and unfolding, because we don't have a good structure to the beginning here. Instead, I think this is more of an overextended C wave in a 3-3-5 corrective pattern. This again is a little ABC structure that forms inside here. One of the things I do want to stress is our bigger ABC, as I've drawn up on the chart, is in that targeted range, the range that we've been talking about for several weeks. And although we might see a little bit more slippage to the downside, I think it's very important that we actually reflect on where the current price is and how much lower we think the price could be going in that kind of medium term. So a little bit more slippage, maybe we'll lose the $7 just a little bit, but I'm not expecting it to kind of go down significantly further, in my humble opinion. We're closely watching this zone because it's likely where the bearish momentum could start to fade and where we might see some buying interest. So with all of that in mind, let's analyze the potential support and resistance levels. The key support zone to watch is between $8.23 and $6.25. It's crucial for ICP to hold this level to avoid further declines. Okay, so why is it important to hold that range between $6.25 and $8.23? Well, if I zoom out of the chart here just a little bit and actually take a look at some of the historical areas of previous resistance, this is the range that we're talking about, this one right in here. Now, if I pull this all the way across, you can see that back in February of 2023, we found that this area was resistance, and we tested it again in April of 2023 and late April of 2023. We then got a big breakout to the upside. This breakout was in December of 2023, and we had fantastic runs up to our local high at $20.98.5. Now, this area we've come back down to. So as we often said, previous areas of resistance do tend to turn into support. There was a lot of previous selling areas or selling pressure in this low range between that area of $6.25 and $8.23. And if people were selling here, they can now get back in at those very same prices, meaning that they've seen the price potential, and this area could now be a buying area. So what was previously selling could now turn into buying. Now, it's not a coincidence, of course, that this particular range happens to be exactly where our C wave is looking to find reversals. So taking a look into all of those bearish scenarios where we have the 50 EMA, the 50 SMA looking to cross down lower than the 200 EMA, we have the ABC structure, the potential 335, or even worse, if it does turn into a more impulsive breakdown into a 535, then we could potentially still see this range holding true to being a strong support range for ICP. If, however, for whatever reason, we see significant selling pressure and there isn't really an appetite for buying ICP, then this range may not hold. And if it doesn't hold, then we're going to see further slippage to the downside, where realistically speaking, we could be talking about coming down quite aggressively more towards the $4 to $5 level, which will be really unfortunate if that is the case for ICP. But at the same time, I think it will be a fantastic place for dollar cost averaging and for building out those particular areas of your portfolio, right? Basically building bigger positions in ICP if that is what you want to do. So taking a look at this area and charting out the kind of, support resistances, this is a critical area that ICP just must hold. But here's the twist. If ICP can maintain support and we see a broader market recovery, it could be poised for a bullish turnaround. Keep an eye on that 50-day EMA and SMA for signs of shifting momentum. And so with all of this in mind, if we are able to hold support here, well, this is where we then start to see that next big run to the upside, in my humble opinion. Don't get me wrong, it's going to take time to play out. I don't think we're going to see instantaneous gains here, but this seems to be the area between that $6.25 and $8.23 to be building big positions in ICP ahead of that next big run to the upside. Now, how big of a run do I think we're likely to see here for ICP? Well, I do think it's going to be reasonably significant, but I'm not expecting new all-time highs after everything that happened historically for ICP. Now, if I do zoom out of this, you can see I have expected ranges drawn up already, right? This isn't anything new. We've spoken about these ranges many times in the past. $26.90 to $83.61 seems to be a big, broad area, but we kind of narrow that down just a little bit here by talking about the area of 37.46 to 58.30. And again, we can refine that with a little bit more finesse and talk about the range just up here at $55 to $83. This seems to be the area that I think we're likely to see ICP kind of surge towards. But these are still, in my opinion, conservative-based targets. If we are able to hold this range, we could potentially be seeing ICP run up significantly higher. And should we actually go ahead and hit something like $160, well, all of a sudden we've turned ourselves into an incredibly bullish pattern where we are not just tracking a 3-wave move to the upside, but instead a 5-wave impulsive move to the upside, where if we do see $160, we would expect to see over $200 by the time the bullish market comes to an end. But again, these are kind of ideas as to kind of where things could potentially be going. It's speculation, if you will. There is lots of different kind of price predictions for ICP out there. Many people talk about potentially new all-time highs. I talk about these conservative targets with the idea that maybe we'll get a breakout where we do actually hit some of these impulsive trigger points. But until we start to monitor those structures and as they start to form out, it's really just kind of finger in the air speculation at this point in time. So what's your prediction for ICP? Are you expecting a bounce back or more bearish action? Let me know in the comments down below. So guys, if you have found today's video useful and informative, smash that like button. If you are new to the channel, why don't you go ahead and subscribe? And if you haven't done so yet, give this video here a click and stay well informed with everything else that's happening in the crypto space.